Is the housing market going to crash, or are we just seeing a market shift? After the last couple of years with buying frenzies for homes causing multiple offers, crazy accelerations in prices, and home price appreciation seemingly going through the roof, I can understand why you may be thinking, this is just like before. We're in a housing bubble and the housing market is going to crash. But let's look at what the experts are saying to see what is really happening in the housing market. Hey, welcome back to my channel. And today we're talking about the housing market as of July 2022 and whether we're in a housing bubble or whether we will see a housing crash like 2008. So let's start with the economic slowdown. It's obvious, it's happening. This is a topic on your news feed, on the TV news, and quite frankly, everywhere you look. You're hearing about the dreaded word, the recession. The definition of a recession is 2 consecutive quarters of negative GDP. So yes, the experts agree we are most likely heading for a recession. But what does it mean for the housing market? What about interest rates? Will they continue to go up? How does a recession affect these 2 things? Throughout history, during a recessionary period, interest rates go up at the beginning of the recession, but in order to come out of the recession, interest rates are lowered to stimulate the economy moving forward. Historically, we've seen a repeated uptick in interest rates followed by lower interest rates. So, interest rates have risen. We saw that dramatic increase between January and May of this year, and right now they're hovering between 4.5 and 6%. Over the past 5 recessions, mortgage rates have fallen on average 1.8 percentage points from the peak seen during the recession to the trough. And in many cases, they continue to fall after the recession technically ends, as it takes some time to turn things around even when the recession is technically over. Does a recession mean a housing crash? The answer is history tells us that a recession does not equal a housing crisis. In 4 out of the last 6 recessions, housing prices actually appreciated between 3.5 and 6.6%. The housing crash of 2008 did cause a depreciation in housing prices. However, that was due to the lending practices being used at the time, which are no longer an issue because of the 2008 crash. In fact, the impact of housing on the country is huge. In every instance, housing has led the economy out of a recession. So, what about selling your home? How does this affect you if you're thinking of selling? Is now still a good time to sell? Well, obviously, that's a question that is only for you to answer, but you can make an informed decision with the right information. And all of the information is pointing to a seller's market continuing over the next 3 to 5 years. Right now, we're seeing more homes coming on the market. This means more competition for your home. We're also seeing that offers over asking are actually declining because of that competition. According to Realtor.com, a month ago, 61% of offers were over asking price, and that number is now down to 55%. The months of supply number has gone from less than 1% in January to now we're over 2%. But remember, experts agree that anything below 6% is still considered a seller's market, so we're well below that number. Based on this information, now really is still a good time to sell, and you still have a good chance of receiving multiple offers and over asking price. How does this affect you if you're thinking of buying a home? Is it not a good time, or is it a good time? Let's start with this quote from Lawrence Yun, Chief Economist at the National Association of Realtors. Home sales have essentially returned to the levels seen in 2019 prior to the pandemic after 2 years of gangbuster performance. So what this means is that there are more options available, more active inventory on the market, less competition, fewer bidding wars, and therefore less upward price pressure, which is all good for buyers. Home prices are still projected to increase, just at a more moderate rate. The forecasters from Fannie Mae, Freddie Mac, CoreLogic, they all forecast deceleration and appreciation on home sales. So what does that mean? Well, a deceleration just means that we're not going to see huge appreciation like we have over the last 2 years, like double digits. But we are going to continue to see appreciation. That appreciation, experts are saying, will be somewhere between 6.2 and 8.8%. Now, let's look at the Home Price Expectation Survey, which is completed every quarter and is comprised of 100 economists and housing market experts. They project what they expect to see this year and the next 4 years for the housing market. And what they're saying is that they expect between 8 to 9% appreciation in 2022, and then between 3 to 4% appreciation each year for the next 4 years. So, I'll say it again, if you're thinking about buying, now may be the very best time for you to buy. You'll still get appreciation after you purchase, and if you wait, well, you're only going to be paying more for that home. So I know this has been a lot of information and graphs, etc., but to sum it all up, now is not only a great time to sell while inventory is still historically low, but it's also a great time to buy because home prices are only going to continue to appreciate, meaning you'll pay more if you wait. So according to all of the experts, no, the housing market is not going to crash. Housing prices will continue to appreciate. We're just not going to see double digits. And the market is simply shifting to a more normalized market. I'm Betsy Taylor with Betsy Taylor Homes and RE/MAX Success. And remember, I get client-focused results that move you. Thanks for watching. And if you like this video, hit the like button, leave a comment, and subscribe to my channel. I upload new content about the housing market, home buying and selling tips, and happenings in the 20878 zip code in Montgomery County, Maryland every Thursday. Have a great day. Bye.